Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as I speak to all of you all this Monday morning at around about 10:15, markets are in the green, holding out quite smartly. Before I go any further, let me give you certain levels on Sensex, Nifty, Bank Nifty, Rupee Dollar equation, and crude oil. Sensex is up about 375 points. 74,215 is the level on Sensex. Nifty spot up about 100 points. 22,504 is the level on Nifty spot. Bank Nifty is up 310 points. 48,370 is the level on Bank Nifty. On Rupee Dollar and crude oil, well, there's been a significant or a very commendable strength in the rupee against the dollar. As I speak to you, Rupee Dollar equation 86.87 rupees to $1 with strength of 0.13 paise. And on the crude oil front, since last week, we've seen a very decisive down move. In fact, certain key support levels on the lower side have been broken. As I speak to you, Brent is trading at about $71.10 to a barrel, and NYMEX is trading at about $67.68 to a barrel. Marginal uptick this morning, but this downward move, according to the reports that we've read last week and the commentary that has come in, most likely possibilities that there could be a decisive downward move on both Brent and NYMEX. NYMEX could be sub $65 and Brent could be sub $70 in the coming days and weeks. That is purely because of the supply side statement made by OPEC plus nations. And of course, the demand side downward movement has prompted crude oil prices to cool off. Extremely positive for those economies which are largely dependent on imports of crude oil, like India and China. So this is a positive move. And of course, strength in rupee against the dollar is also going to add to the sentiments. On the markets, friends, well, after continued downside move and heavy selling by foreign institutional investors, we have seen some kind of stability coming into the market. Our sense is that there are events lined up this week, both more on the global front and one or two events on the local front, which will give some kind of direction to the markets. So what are those events? Well, there is going to be interest rate decisions announcement by US Fed, interest rates decision announcement by Bank of England and by Bank of Japan. And along with that, there are going to be other global data points, news flows that will come in this week. Domestic event, well, we are going to see the WPI numbers coming out this week in India. That will also give some kind of tailwind to the markets. But given the entire backdrop of events, Trump trade tariff tantrums, and the news flows from the global arena, our sense is that market would possibly try to extend the consolidation that we've been witnessing since last week. The broad range that we have in mind, given the current backdrop of events, on the lower side, Nifty range will be somewhere around 22,200 to 22,300. And on the higher side, if we are able to take off decisively 22,550, 22,600, then 22,700 to 23,000 are the levels that one can watch out for on the Nifty. It's going to be a broad range given the data points that we are going to witness more on the global front and somewhat on the local front. We have been trying to consolidate, we've been trying to gather some momentum on the upside, but that is marred by the continuous sell side figure. Even last week, if you actually go to see, friends, FIs have remained largely on the sell side. And on the flip side, domestic institutional investors have been on the buy side. The difference between the two, sell side by FI and buy side from DIs, is getting narrower. And that gap is narrowing largely because of the numbers on the sell side is tapering off. It's coming down. It is not like how we used to see in the earlier months. So slowly, steadily, as these numbers taper down from FIs on the sell side, and support from domestic institutional starts coming in, feeling is that we will be getting more strength on base building exercise, and then possibly upward movement will be seen. It will not be a straight V-shaped recovery. I think given the headwinds that we have faced since October last year, October 24, 1st October 24 onwards, still current date, it is only prudent to see, gradual improvement, consolidation and gradual improvement. I think that will possibly bring a lot of confidence rather than opening up, gap up, and then getting sold off, or getting gap down, opening, and then try to recover. And by the time we end the day again, the markets come under selling pressure. So this pattern is more or less going to, volatility pattern I'm talking about, is more or less going to subside. And the one of the reason why we say this is because of the India Volatility Index, that is India VIX. If you remember, friends, India VIX used to be continuously at an elevated level of 15.5, 16%. In fact, some days they were past, India VIX has passed 16% also. But currently this morning, India VIX is trading at about 13.60 with a marginal strength of 1.5%. Our sense is that India VIX settles at 13 or sub 13, closer to 12.5 and 12, then this momentum of stability will also gain momentum. It is going to be choppy, it is going to be volatile, but that volatility is going to get subdued as we go forward. Data points in terms of the AMFI data for the flows into mutual fund related schemes, this time was a little bit lower, and rightly so, because we are in the month of March, last month of the financial year. Advance tax payment date has already been met with 15th of March. Redemptions and cash balances building up exercise would have been put in place, and hence that kind of a slight downward move in terms of flows as far as SIPs are concerned. But coming April, I think this momentum is likely to continue, and we are going to see elevated numbers slowly, steadily into the mutual fund market related schemes in form of SIPs, and of course direct flows into the equity market. We also expect some amount of upward move in the number of new accounts getting opened in the depository as well as with intermediaries. Building upon this and elaborating it further, our sense is that 2nd of April next month we will have, that is the date where President Trump has spoken about retaliatory tariff. How much, what quantum, which country, what services and products, I think clarity will emerge in the second week of April. And from 10th to 15th of April, we are going to witness the curtain raiser for fourth quarter earnings. On the tariffs front, it is very difficult to say anything preemptively because of the uncertainty nature. Had we had clarity with respect to tariffs and numbers, countries, services, manufacturing, etc., I think it would have helped us to elaborate a little bit more. But in lack of that clarity, I think we'll have to just react to that news flow as and when it comes into the public domain, or as and when the announcement is made. On the Q4 earning fronts, let's hope that after seeing second quarter a little bit of disappointing performance, third quarter was better compared to second quarter. And if one has to dwell upon that third quarter number and put a prospective outlook on fourth quarter, then fourth quarter could be a little bit better than what we've done in the third quarter. In third quarter, mind you friends, post third quarter earnings, there have been quite a few upward revisions sector wise and company specific wise in terms of earnings and targets for stock prices. We expect this upgrades to gain momentum compared to the third quarter, just in case the anticipation of fourth quarter being better than third quarter works out in terms of actual numbers getting delivered. So this is going to be a challenging time, friends. For traders, I think it is only prudent to put your appropriate stop losses in place, both in terms of downside and upside. Try to maximize your profit. Don't expect for large returns from short to medium term point of view. And it would be prudent to put the stop losses both on the downside and upside in the system rather than keeping it in the mind. For investors, I think it has proved out to be a good strategy to buy on dip from the lower levels that we saw of 22,000 somewhere around this month. We have been managed to gain some momentum on the upside, but we can't still say decisively that the downside is in place. There could be some more pressure depending upon the news flows, especially from the global arena, which will impact not only our markets but also the markets across the world. With this perspective in mind, as we always give you two long term investment ideas, we have identified two more opportunities in two different sectors. The first one is from power transmission and distribution category. As we all know, friends, India has been a power deficit country right since the time we got our independence. So as of date, also we are a power deficit country, but the government has done a lot of things to enable new power generation capacities to come up. Power theft, which was a big threat, has been reduced to a great extent. And capabilities in terms of clean and green power, manufacturing capabilities, is going to translate into a huge opportunity for power sector. With that perspective, of course, we have positivities on power generation companies, but one area where one need to focus over here is power transmission and distribution. And in this sector, power transmission and distribution, there is one company which has got a decent amount of network in terms of distribution grid lines is Power Grid Corporation. The correction opens up immense amount of opportunity for long-term investors to look at this particular stock. In terms of valuation, fairly valued, downside could be protected. Targets from a long-term point of view on Power Grid stands somewhere close to about 355. In case of the earnings improve and the expansion that the company has spoken about is put in place, then earnings will possibly decide which way the targets go. The second one is from a life insurance company. Life insurance sector has been more of a sideways performer, if you will. Traditionally and historically speaking, months of January, February, March, which is the last 3 months of a financial year, premium collections go up. But we are not speaking about from a short-term point of view. We are on the more on the fundamental side. What we've seen is that a lot of people are now taking insurance very seriously, getting insured not from a perspective of tax saving, but getting insured from a perspective that if something has to happen to an individual, then the dependents of that individual will get benefited in case if that individual has taken a large sum assured in a proper term policy. And this has seen a decent amount of uptick. We expect this uptick to translate into a better upside. And hence, we've come out with one investment idea in the life insurance segment, and that is SBI Life Insurance. Over here also, valuation because of correction looks very attractive. Downside could be protected from here. And for long-term perspective, our target stands at somewhere close to about 1,750. But these are the two long-term investment ideas, friends. These are not from short-term, medium-term. This is not a BTST 3 months, 6 months kind of time horizon. I would like to reiterate that if you decide to invest in these two companies after your homework, then please have long-term time horizon, 12, 16, 18, 24 months plus. Stagger your investments. No need to put all money at one time. There is uncertainty in the markets, which could open up opportunities to add at lower levels. So start from a small, humble beginning. And if you get lower levels in these two companies, I would request you to add to it in a disciplined manner. Thank you very much for your patience hearing. I'll see you again next week. Till then, please do take care of yourself. Bye bye.